how you put it. There's like a mean to everything, right? Like, and I always, as I have become a little bit more, I guess of like a hippie. I don't know what you would call it. I'm more in tune with my emotions. I always think of like my attitude. There's an average level, like there's an average Frank. And there are days where it's like, ooh, I'm riding high. I'm feeling good. We kind of talked about this on our walk from Tasty Trade to Small Exchange. Like there are days where it's like, I've been eating healthy. I got a good amount of sleep. I'm feeling fantastic. Like the ladies on the street are looking at me. And then there are other days where I house a milkshake and some donuts. And the next day I'm like, my whole body's jiggling. I feel awful. And if anybody talks to me on the planet, I am going to scream at them. There's a mean, though. You get the highs and the lows, everything baked in there. Same thing with markets, right, my friend?
Absolutely. Same thing with markets. And like you said, we talked about this a couple of days ago, got Pete's, archaic views on all of this. So I want to get your ideas on all this, too, because I pretty much have a flat way of thinking about this in terms of volatility when we're talking about options. But I want to, get to how you think about this in terms of some of these futures. And I think this has also been one of the things that has created like hesitancy at times. Something's got to really be below like a long-term mean, I think, before I would think about doing something in futures. Whereas, and we'll get to that in a little bit. But as far as options, like we said, when we got the VIX, we're looking at volatility. The reason why we say volatility is really low right now in the market, it's like, well, if you look at the money implied vol straddle on SPY, I haven't even looked right before the show, but I'm guessing it's like 11 or 12. There's no events coming up. We got nothing. We got a long weekend ahead. So, nothing's going on there. And when we look at the VIX, right now, VIX is like, I think it's just below 16. Long-term mean, like you have laid out here in the chart, is usually like 19. And so, things are low. Not a whole lot. Why are things low? Well, we know for the most part, people are vaccinated. We got things returning to normal. You got even oil sitting on highs. It's like, It's like 50% higher than this time last year, I think, or something like that.
It's like 100% higher than where it was last year this time.
Yeah, right. I mean, because of where we are, because of what's going on. Consumption is back. Electric vehicles are definitely taking over, but they haven't yet. Right. And so that's why oil is trading where it is. The market is doing what it's doing because things have calmed down. We just came through some hella crisis. And so volatility has come in big time. And we don't really have any major events. We got some stability, if you will, in the White House. And so that's kind of where we are.
It
makes sense.
It's funny because I brought up the Frank's attitude thing, but it's funny that like this is, I didn't even mean to do this, VIX and volatility and us being below the mean in terms of volatility, that is more calm than we normally are. That kind of correlates to like Frank having like a peaceful, calm day, right? Like the market on a day like today, it's like, it's a couple of points higher, another all-time high in S&P 500. As you say, no big things on the calendar for the next couple of days. We've got a long weekend with the U.S. market holiday on the upswing in terms of pandemic, a lot of that stuff in the rear view. I know that there's still some countries that are definitely feeling it here, and there are some problems in there, but by and large, U.S.-based equities, not seeing a lot of that turbulence. And so, that correlates to being below the average level there. We're in a calmer state than average, and that's what volatility is showing. I mean, VIX, I think, back under 16 is the first time we've been back to these levels since really before that pandemic. And this is a really freeing thing. Like, this is why I think a lot of people jump on board with options trading or have done so in the last 5 to 10 years, because you can look at something like this and be like, this thing has a mean and it goes above the mean and it comes back. It goes below the mean and it comes back. And I don't have to bet on like, this thing's going to go higher than this thing. Or, all I can do is buy stuff and hope that it moves higher and I have to be afraid of a crash all the time. Options are great because you can be neutral. You can just say, hey, volatility is high, fear is high. I'm going to sell some of that, or I'm going to buy it. I'm going to ride with it. It's a different kind of trade that is very empowering and freeing, but it's the same type of thing, Jermal, and hopefully you can jump on board with this a little bit in the same way that, fear is high and option sellers go out and be like, all right, I'm selling these strangles, I'm selling these iron condors, I'm selling these straddles here because volatility is higher than average. There are many markets in futures that live under the same principles. You referenced crude oil. I know I got yields up here on the board, but crude oil is another one that, like, you could have been trading crude oil in the 90s, the early aughts, the 2010s, and it's probably going to be between $50 a barrel and $100 a barrel. And something like that is so sick because you're like, all right, there isn't a natural drift to this thing like in stocks. And a lot of people who don't know about futures or haven't made that jump, it's like, oh, I have to choose between, Microsoft and Apple and Tesla. And if I sell calls in any three of them, they're all just going to kill me. It's like, it's the same trade, essentially, something that drifts higher in yields and crude oil. It's cool to have something that, like, no matter what decade, of course, they're going to be in different spots, no matter what decade, no matter what year, no matter what week. The place that they're at is going to be likely somewhere they've been in the past, and they're dancing around a range that they've been at for their whole existence. That's kind of cool, right?
That's totally kind of cool. And I think what you kind of mentioned too, and we should probably mention also as well, is there's certain things that affect these products when we talk about it, what's going on and why they're trading the way they are based on around the mean, right? So right now we know rates have 10-year rates have come up higher ever since we're getting out of the pandemic. I mean, what were they trading, like 2 and change prior to the pandemic or something like that?
They were as high as, I think they'd peaked their head above 3%, but yeah, consistently around 2.25%. And then after the pandemic, all-time lows at around 0.5% or 50 basis points.
Okay. Yeah. And so, I mean, I've always watched it. I've always kind of kept an eye on it when the market makes me keep an eye on it. I do that a lot. It's something that's benefited me. I don't necessarily, look at something every single day. It's only when it starts to get interesting. Yeah. And I think a lot of that, what guides that is this concept that we're talking about, which is this mean revert. Like, where is something based on how low or high is it compared to its mean? And given a certain time period, right? So that's always, I think, the big thing, mentioning a certain time period. I think what we have here is a year and a half, right? Over the last year and a half, what is the mean on the 10-year? And so that's what makes it interesting right now. It's sitting right at that mean. And so admittedly, like, I got back in, got long. I'm interested to see what's going on. We're just under it now, but this is what makes it compelling because it's sitting somewhere around that mean. It's sitting near. It's not too high. It's not too low, and it's interesting to me right now. Right, I'm still learning how to trade it, but and the best thing about it is our whole principles for the whole company. The way we talk about trading small. I'm in small. So if I do get burned on it, I'm not going to get hurt too bad, and the efficiency with which we can trade it also is appealing to me.
Well, because it's the same thing. And here I bring up the example of, like, so now how do you trade something like VIX mean reverts, yields mean revert, crude oil kind of has a mean reversion. Same with gold. I mean, gold got up to $2,000 and now it's come back down to like $1,700, $1,800. Very normal prices there for the last several years in gold. A lot of these futures markets, when you're talking about commodities and interest rates and also foreign exchange markets, they have a mean that they deviate from, absolutely. But you tend to see the same prices in most, like, it takes a lot for example, like the pound to go from trading, $1.10 to $1.40 US dollars to pound to like, oh, now it's like 60 cents US dollars per pound. Like, that would take a They freaking left intervention. They left the EU and the stuff didn't even change that much, dude. So like a lot of these markets do have this mean reversion. How do you apply a strategy to it? Well, as you could probably insinuate, for me, it's really as simple. And I don't want to call myself a contrarian because that's a little bit played out, but like, I'm just the type of dude that, like, when someone is like, oh, gold is at 2,100, wait till it gets to 4,000. I'm like, no, that isn't good. Like that dude doesn't know what he's talking about. And because, like, of course that could happen. Gold could it went from 1,500 to 2,000. It could go to 4,000. It's never gotten there, but like, it would take so much. And so I'd love to be the guy that's like, I think normal stuff is going to happen in the future. And so you could have bought these historically low rates. And of course it took a little while to mean revert. trading in 2008, 2009, it took over a year for volatility to come down. That stuff takes a while and it moves through you. But like you said, with the small size, like you could have picked up the 10-year rate at $14, which is 1.4%, small. It gets back down to $1.25, pick up a little bit more, back down to a one even there, 1 percentage point. Scaling in and out, it's the same with options. Like when VIX gets up to 20%, it's like, oh, I'll throw out an iron condor. It gets up to 30, it's like, maybe another iron condor, maybe a strangle. It gets up to 40 and 50. It's like, all right, I'm getting all the premium I can get. I'm getting all of it in here because these are historic levels. That's how you apply your mechanics around this stuff. Because we have seen this stuff works, Jermal, and you know this, on like a long-term basis, also on a short-term basis. I mean, we saw rates this week in the 10-year go from 1.5% down to 1.4%. They're right back up to 1.5%. So trading them intraday, trading them day-to-day, trading them month-to-month and year-to-year, mean reversion in all of this stuff. You just got to make sure you're in the right markets. I mean, how do you strategize? How would you apply kind of like when VIX moves higher, how would you apply iron condors and strangles and stuff like that to a move higher in VIX? Like, are you the type that waits for really, really high prices and then you go full boat? Or are you like, you're sprinkling a little in there? Because that would dictate how you would buy and sell futures around a mean.
Yeah, I think it's, with regard to like, trading that equity vol and with VIX, it really depends on, I guess, the environment, how worried we are, right? Like, there's no way anybody, including myself, saw anything coming like we saw, in February, March of last year. Yeah. But I did start to feel like in middle February, this was going to be something. And I was definitely kind of waiting some because we'd been hearing about it. It seemed like a joke. I mean, you start hearing about people singing to each other against their condos, and it was like, is this really happening? I'd see pictures and stuff like that on Twitter, and I was like, this got to be fake.
There's an NBA player. To happen in Europe, remember the NBA player thing?
Yeah, right.
NBA like, dude who's like, he's joking about it, and then like all of the NBA gets COVID. It's like,
yeah, right. Like then you started to know something was up, and at that point, it was kind of like, okay, let me just sit back and watch a little bit, just because surprisingly, we have seen some big events over the last couple of years, last 10 years. I mean, we've seen some big, black swan events, if you will, in a way almost. So it is kind of recency bias. We are kind of at least prepared to be a little bit cautious versus, in the early aughts, like you said, like that didn't happen as much. You just were like, I'm not worried about anything. Everything will be fine. Whereas now we've seen some big events in the last 10 to 15 years. So we are a little more cautious. So now I am kind of cautious like that. I do start to see if VIX is up to, if it gets, I think in my case, when I think about like, even right now, VIX is a little low. It's a little, sitting at 15 or so, it's kind of like, okay, this is a good time to sort of take some things off the table and let's wait and see if we do get a nice pickup coming up, because we are pretty, decently below the mean. I'm surprised by it. And if it lasts, that's fine. But this is probably one of the things that I've gotten better at in terms of my trading. I would usually just put on a bunch of stuff right now regardless and just say, okay, well, now that's low, I'm going to actually buy vol and see what, comes next, because we're going to revert to the mean, which we probably will, but there's no telling how long that takes. And I think we did a good piece on Tasty Trade recently about how long that may take to revert to vol. I think on average, it's like 55 days before VIX. If VIX is this far below 20, it takes like 55 days to rise above 20. That's a long time to hold on some long vol. You're kind of bleeding away in the meantime. But so I try to think about it like that in terms of this futures trading now. So now I'm looking at it from the standpoint of, okay, like you said, 10 years a little bit below, it would want to 14.5, buy some there. Let's see what happens from here. I'm going to keep an eye on it, keep watching and see what's going on, and pay attention to a lot of the, fiscal stuff in the market, what's going on there, because that's really what's driving this right here.
Absolutely. And that's funny that you say that, because it always is like, it's something that is driving it in the news that is kind of unexpected, like the pandemic news last year, where it's like you say, it's kind of like a joke, and it like seems like this thing that's far away. It's like, oh, it's in, remember early on after like obviously coming out, the news starting to come out of China, it was like it hit Italy hard, and a lot of people were just like, "Oh, that's just a thing in Italy. Like we're good." And then and then it starts to like creep up on you. The same with the Fed and interest rates. Different stuff always drives that mean reversion. I myself don't necessarily. I'm not like a big read the news guy, so I don't care that much about that. But to your point of being like more patient, it sounds like you're just more patient with those options trades. And what's great about that, and we can leave off on this, is if you're patient with options on stock trades, that is a fantastic thing. That means that like instead of selling strangles at 16% VIX or 20% VIX, you're starting to dip your toe in at 25 and 30% and 40%. You're getting better value because that patience is leading to better value. But you don't want to sit on your behind for 50 to 100 days waiting for that better value there. So now you have added in futures a ton of markets that exhibit the same qualities as VIX, the same stuff you're used to, but can on weeks like this week where VIX is back to those lows, not giving you anything to really do in the way of stock options. Crude oil is making a multi-year high. You could look at, in the same way you would sell options on high VIX readings, look at selling some small crude oil positions and playing that reversion lower. Or in the last several months, you could have played the reversion in yields. You also, I know you for a fact, played a little bit of that US dollar reversion back to the mean, adding futures to that bag of equity options is so great because you have these mean reverting assets that you don't have in equities. And while you're waiting for equity premium to climb, that VIX reading to climb, you have more stuff that show the same qualities that essentially have the same type of trade to it. So I love your patience there. I love your strategy. Now you can apply that to different things. Like this, gold is moving sometimes, and stocks and interest rates and everything else, nothing else is moving. Now you can apply these same aspects to all of those asset classes.
Yeah, I mean, at the end of the day, and this is sort of, I guess, something I'm reminding myself with regard to trading futures. At the end of the day, volatility is movement, movement is volatility. So it's the same type deal. So if something is moving a good bit, it's probably because it's a little volatile, right? Whether we're talking about, whatever the volatility, and there is a volatility on the 10-year. I think there's something on it, but
TY
however much it's moving, that's based on how volatile it is. And so depending on how, far it's deviating from the mean, how much it's moving, that determines your aggression level, right? It's the same deal with volatility. We're talking about the VIX. As VIX gets higher, you're getting a little bit more aggressive as far as selling that volatility. So I'm trying to think about it in those same ways. I'm not, I guess, worrying about, I'm paying attention, like I said, to those outside factors that are affecting this move in the 10-year, what's making it move. But I'm using this idea of potential mean reversion and the way, how much movement it's actually doing to determine my aggression levels. So,
Awesome, man. That's a great wrap up there, Jermal. Thanks so much for jumping on with us as you do every Thursday here. It's been a blast to have you running this journey of the leap, man. We're getting so far. Remember, we were talking about what the hell futures were. Now we're talking about trading mean reversion on interest rate futures. He's feeling it. He's ready to dance. We're hanging out here at the Small Exchange.
Got my boys behind me right here. These two guys. What's happening, fellas?
Yeah, absolutely, Jermal. Well, I'm going to let you hang out with your boys here for the extended little bit. I'm going to jump on with my boy, Pete Momet, here in a second. Thanks so much, as always, everybody, for watching. We'll be back with Splash into Futures in just a little bit. Thanks, everybody.
No doubt.